Hello everyone, welcome to Business Live. Coming up in this bulletin, surge in demand for dollars by companies paying for imports before the year-end holiday season ends the Cedi's world-beating performance. What is contributing to this? We'll be finding out. Also in this bulletin, we will be exploring the implications and feasibility of government's move to consolidate AT Ghana, formerly Airtel Tigo, and Telecom Ghana to create what it says a stronger and more sustainable telecom operator. We are live with an industry person. Plus, Ghana to receive favorable credit ratings following Cocoa Board's successful payment of a 2 billion cedi coupon to investors of restructured cocoa bills.
Extent that they've been able to honor their obligation, it means that they are credit worthy. And so once they go back to the market, I don't foresee any challenge.
We've got details of these and more lined up for you. Please stay on. Thanks so much for your time. I am Pius Kojobaka and want to talk about the Cedi because a surge in demand for dollars by companies paying for imports before the end-year holiday season has ended the Ghanaian Cedi's world-beating performance. According to data from Bloomberg, the local currency had weakened 13% so far this quarter, the biggest decline globally. More in this report. According to Bloomberg, the Cedi traded 0.1% weaker at 11 cedis 95 pesos to the dollar. On a year-to-date basis, it gained 23%. Ghana's import-dependent economy shifts in everything from food to machinery. Demand for products from abroad tends to increase toward the end of the year as businesses stock up before the Christmas holiday season. That erased some of the Cedi's 50% gain that was underpinned by a stronger bullion price and saw it ranked as the world's best performer in the 3 months through June. Some analysts say the central bank's inability to supply sufficient foreign currency to the market has contributed to the Cedi's current weakness. While Ghana's gross international reserves soared to a 3-year high of $11.1 billion by the end of June, the central bank won't deploy sufficient funds to fully meet demand for foreign exchange. Joining us via Zoom for a conversation, the back of this is Manager of Macroeconomic Research at Ghana Commercial Bank PLC, Courage Buti. Thank you so much, Courage, for making time to join us here on Business Live. And I'm wondering, was it ever expected that demand for dollars by companies paying for imports ahead of holiday season would end the Cedi's dominance as world's best performing currency?
Well, good afternoon and good evening to your listeners. I didn't expect the Cedi to be very stable throughout the whole year or stay at the 10.3 or thereabout levels we reach throughout the year. There is always going to be volatility. We know the seasonalities and currency movements in Ghana. We know around this period, and there are 2 main events. There's cocoa season coming, and with the depreciation of the Cedi, that has impact on the price of cocoa and all that. You could understand some of the argument that say that probably there are some adjustment happening in the lead up to the cocoa, probably unspoken truth. And then, of course, there are also those who are not too sure that the stability that we have has come to stay, and they would want to stock up and buy all their goods ahead of the season. Typically, you tend to see a lot of depreciation. All of these things will be at play. And then, of course, those who were most hit by the Cedi appreciation, those who bought so high at 15, 14, and all of a sudden it fell sharply to about 10, with the price momentum now going, you are either buying more now to dilute your loss, or you are stocking up to sell when it rises. So there is the element of speculation as well. So there is an element of maybe market sentiment. There is an element of speculation in there. All of that play a role. So it would always exaggerate the movement in the exchange rate, and it will not reflect the real fundamental because of these intervening factors, really. But if you ask me, I never really expected stability around the same level. It was always going to move back, and the people who were most hurt would try to trace their path back when the opportunity presents itself. And it looks like this is one of such opportunity for those kinds of people.
Interestingly, the Cedi is said to have weakened by 13% so far this quarter, the biggest decline globally, thereby eroding, its 50% gain in the 3 months through to June. Now, that's serious. Couldn't BOG have done anything about it?
Well, there is only so much BOG can do. What they have done so far is do some interventions on the market to improve liquidity. Can they do more than they are doing? You don't want to fund frivolous demand. I think that is a key principle in FX management. You need to be able to gauge what effective demand is and what is not too effective or quite frivolous. And you don't want to deplete your reserve funding, especially when you don't have bottomless reserves. You don't want to deplete it funding those demands. What you want to do is to manage expectations of the market, use moral suasion and tighten regulations and enforce implementation of regulations in the market. I think that is really what you want to do under the circumstances rather than deplete your reserves in the name of trying to support the currency. And I think fundamentally, let's put it right that fundamentally the CD is supported. The fiscal position, the monetary stance, which is still very tight, in fact, overly tight, even given the where inflation is currently. And we are seeing also the growth pulse. We're seeing how inflation has receded sharply. And of course, all the other factors. Externally, we have a current account surplus, and it's likely to close the year in surplus. Offshore investor sentiments are beginning to pick up again, and you see offshore investors preparing in anticipation of a new bond issuance and all that. These factors together support continued stability of the city. So it couldn't be a fundamental issue. It is a temporal or transitory issue, and these are things you don't want to deplete your reserve on. So I think they are doing what is appropriate in this time, tighten the regulations, ensure market conduct is responsible, and those are the ways we can navigate this phase.
I want your take on this. Some have said the central bank's inability, for example, to supply sufficient foreign currency to the market really contributed to the city's current weakness. Do you agree to that?
If you could take that point again, please.
I am saying that some have argued that the central bank's inability to supply sufficient foreign currency to the market really contributed to the current woes of the city.
Well, the central bank, the central bank doesn't have the responsibility to be the sole supplier of FX to the market. If that were the case, it wouldn't have been a flexible market or a demand supply driven market, right? Central bank's job should be to smoothing volatility in FX. So where they feel that there is some surge in demand intraday, and there is some surge in demand, and the liquidity levels in the market at the time would not be able to meet it and will drive unnecessary depreciation or appreciation to levels that are not warranted, then they intervene with liquidity intervention. And it should be limited at that. It should be market forces of demand supply interplaying. And where are the sources of FX supply? From trade, from remittances, and the many other sources that you could think of from foreign earnings of people resident in Ghana and all of those stuff. So when those factors are not fully at play, then you see the Bank of Ghana intervene in the market. We've seen since the crisis started that the Bank of Ghana has increased its role in smoothing volatility and liquidity intervention on the market, which I think is unsustainable, which the IMF has spoken about greatly. And that is why I'm excited that going forward, they are talking of part of the cocoa proceed to come from the LBCs who are funding cocoa purchase will be ceded to the local market. And that is why I'm happy again that Bank of Ghana is directing the mining firm to sell their FX directly to the market. It used to be the case in the crisis period. Bank of Ghana took ownership of that and bought the FX from the mining firm directly. And that meant they had to come to market very frequently to bring in liquidity. If these institutions who bring FX are able to sell them directly to the market, it will improve market liquidity and it wouldn't need Bank of Ghana to intervene very frequently. In fact, that is not desirable. Bank of Ghana should come in only when necessary, not as a daily routine.
And as we seek the Bank of Ghana to intervene in that matter, in a minute, what would you recommend government or the BOG should do in that regard?
Well, assure the market that the data shows and fundamentals show there is a fundamental support for city stability. That message should be clear to the markets. They should also try to enforce the market regulations and the rules for operating in the FX market to ensure that people are behaving according to the rules and are not pricing above the limits and all that. I think those are the things they can do in the meantime. And when required, bringing some FX support from reserve to try to smoothing the volatility so that we do not see unnecessary spikes. I think that is what needs to be done until we navigate this period also.
All right.
But I do not see it as a long-term thing.
Great. Thank you so much, Courage Boti. I truly appreciate your time. It is the General Manager in charge of research at macroeconomic research at GCB Bank PLC. Grateful, Courage, for joining us here on Business Live. Now, let's move to the telecom sector because MTN Ghana has announced that it will adopt a gradual approach in winding down its 2G and 3G networks, ensuring that subscribers are given ample time to adjust to the newer technologies. Now, addressing journalists at the Digital Africa Summit here in Accra, the company's chief executive, Stephen Blewett, acknowledged that a significant section of consumers or customers still depends heavily on 2G and 3G services.
Is unique, and we need to see that there's a couple of things. First, we need to have access to devices to migrate people up to devices that have access to 4G and 4G and above. Because as we said at the moment, a lot of our customers are operating on a 3G layer, a vast majority. Even though there's 4G availability, as we've seen, it's ubiquitous, it's everywhere, across all the networks. The problem is customers are still using 3G. Now, why are they still using 3G? Two reasons. One, some customers choose to do that because they feel that when they go to 4G, they're using data quicker, which in some cases they are, because if you're using YouTube, it optimizes. But besides that, there are a lot of people that are sitting on 3G and below devices. So both have to work together. We believe that we have to go towards its efficient spectrum usage to go towards sunsetting 2G, 3G. But we have to work in tandem with, okay, well, how do we make sure the devices are there so we can do that? Because if you don't work those two together, we'll end up in a situation that we want to sunset it, but people are saying, but I don't have a device, a phone, that can actually allow me to work on a 4G spectrum.
Meanwhile, the Ministry of Communication, Digital Technology and Innovations has announced that the government will merge AT Ghana, formerly Airtel Tigo, and Telecel Ghana to create what it describes as a stronger and more sustainable telecom operator. At a staff engagement at AT head office here in Accra, Sector Minister Sam George assured employees that none of the 300 permanent staff will lose their jobs under the new arrangement. Let's have a broader conversation on the back of these issues in the telecom sector. Joining us via Zoom is an industry person, Maximus Ametogo. He's joining us via Zoom for us to have this conversation. Thank you so much, Maximus, for your time here on Business Live. Now, looking at how bad AT's debt portfolio is, at least per the research we have, the first 8 months of 2025 alone, we are told $10 million, I should say, is lying on the books of AT. How feasible do you think this measure will be?
Yeah, as an industry person, I don't think it's going to solve the problem or cure the problem that the minister wants to, cure. So for AT and Telecel, they all have their own peculiar issues why they are not market leaders. And of course, we all know the MTN is the one leading the market, even though they have a whole embargo on them as an SMP, a significant market power with a lot of restrictions, and they are still leading the market. So when it comes to AT and Telecel, somebody says we have 1.5 telecom service providers in Ghana, MTN and the other half, right? So I don't know to what extent merging AT and Telecel will create a competition, with MTN. MTN, I'm not sure any telecom service provider can compete with MTN at the current rate, even if you double them or put them together. Because you see, building a brand like MTN takes a lot of work and a lot of innovation. And over the years, we've seen what MTN has done in the space, building their brand very strongly, expanding their infrastructure across the country, even micro bundling, where you can do daily, hourly, and monthly bundles. They initiated that. Even when they came as Ariba and Scancom, Space Phone. You remember they started the the minute calls. You can call as a shorter time frame, So they introduce a lot of innovative product. But AT, what power are they taking to Telecel, and what power has Telecel to boost AT's coverage? For me, I think because of government investment in the telcos, that's why they are merging the two. But if you are thinking profitability, if you are thinking transfer of knowledge, I would have preferred moving it to an MTN than a Telecel.
All right, and it appears discussions have already begun, but what would make Telecel accept this offer, knowing very well that sitting in the books of AT, you have some $10 million debt?
Yeah, I'm sure they are investors, so they know how to work the numbers so that it will not affect their bottom line. So if you are coming with a debt, how do you compute it so that it doesn't affect our profitability and all that, and then compute it against the shares that you can also have in Telecel? So government has some shares, I think about 25 to 30% in Telecel. So are you going to compute that? Is it going to be a 50-50 or a 10% extra? Yeah, you have to look at those numbers and compute it appropriately. So I'm sure Telecel will not just say, acquire about to 80 and they are giving you 50% and government has half of Telecel, yeah.
But largely, do you think this would have any implications on the telecom sector? Do you think so?
I don't think so. They are just sending their subscribers to a different telecom service provider, and that's about it. And as to whether they can come together and, marshal their forces to compete against MTN, that will be a dream come true. I'm not sure they can do it in the next 2 years or 5 years. It's
well,
not going to happen.
We'll see about that. But again, the sector minister is envisaging that at the end of the day, when the measure is done, it will reduce costs, remove duplication, and of course, strengthen Ghana's telecoms market. Is that possible, do you think?
I'm not sure it's going to boost or make it more competitive. I'm not sure it's going to do that because all these two telcos put together, I'm not sure they're having half of MTN's subscribers. Even when the MTN was an SMP, they had about 68% in terms of data services. So they are way ahead, and even the mobile money wasn't even part of that arrangement. Now they control about 93% of mobile money. So that's a huge portfolio that they have to their advantage based on the investment they've made in the country and in the sector.
In a minute, if you can do this for me, MTN Ghana says it will adopt a gradual approach in winding down its 2G and 3G networks, ensuring that subscribers are given ample time to adjust to newer technologies. I want your take on that quickly.
Yeah, so these are some of the initiatives the MTN takes to lead the market. Yeah. They are moving from a telecom to a telco. They want to be a technology company instead of just a telecom company. So they are looking at data-driven services, and they want to move their subscribers to that particular, band of service, and they are going to do it gradually because some people still have young phones that they use on daily basis, so they can't just cut them off. And I think it's a smart move that they are making.
Great. Thank you so much, Maximus, for your time here on Business Live, and want to stay a while longer within the telecom space because high smartphone costs remain a major barrier to Ghana's digital transformation, and we have more for you in this report.
At the Digital Africa Summit organized by GSMA, its new report, Digital Transformation as a Catalyst for Ghana's Economic Growth, revealed that while mobile connectivity contributes 94 billion Ghana cedis, equivalent to 8% of GDP to Ghana's economy, a 62% usage gap remains, despite 99% 4G coverage. The report identified smartphone affordability as a key barrier. Speaking to the media, GSMA's Senior Director of Public Policy and Communications, Caroline Mbugua, urged governments to reduce taxes on smartphones and mobile devices to make them more affordable and accelerate adoption.
One of the biggest barriers of mobile broadband adoption is the affordability of service and device. But if we don't address the cost in delivering this service and the devices, then it continues to be a key challenge that we must find a solution. So what we are asking is the industry is prepared to support because, like I said, we require an ecosystem or a cocktail of solutions. Yeah. So bundling of services, for example, is one, and we have seen some countries trying a local assembly, which, I mean, it has its challenges, and so on and so forth. So the industry is ready to support by providing innovative services, but we do need to see that initiative, bold step from government, where we see a reduction of taxes, specifically on smart devices and mobile services, so that we can see the costs come down.
Echoing this sentiment, Chief Executive of MTN Ghana, Stephen Blewett, stressed the need for citizens to have access to the right devices.
We're talking 68, 69% smartphone penetration. So that means just before we've started, let's round it up, you've got 32% of the population that doesn't even have a smart device. And we also need to be careful, we know this. When you look at the smartphones, some of the smartphones are very basic. The operating systems are very basic. So even amongst that 68%, so these are huge, these 30% of people just don't have a smart device. Then you take the 68% of smartphones and you say to yourself, well, how many of those actually have access to 5G and 4G? And that's why the minister kept saying, and the report says, we need to deal with this device issue. And it's an industry-wide thing we have to deal with, because otherwise there's no point in increasing. And as we heard, 6G will come and we'll be still sitting with 4G devices. We can't be left behind as a country like that. It's impossible.
With the right reforms, the GSMA report concludes that Ghana is well positioned to leverage digital transformation as a catalyst for inclusive economic growth.
One of our lead stories, Head of Finance at Meban Capital, Nelson Kujo Kugbaji, says Ghana is likely to receive a favorable credit rating from international agencies following Cocoa Board's successful payment of a 2 billion cedi coupon to investors of its restructured cocoa bills. He's been speaking to Joy Business.
I think that the cocoa sector and the energy sector are two sectors that are so much saddled with debt. And so during the debt exchange program, the cocoa bills were converted into bonds. And so that was supposed to give the government a much longer tenure to be paying the coupons and even the maturity amount. And so it's good news for investors who invest in the cocoa bonds. And I think that it's going to reignite investor confidence. As your reporter rightly indicated, Cocoa Board will be going back to the market to borrow about $4 billion in fresh funds for their next cocoa season. And so to the extent that they've been able to honor their obligations, it's going to reignite confidence within the cocoa sector and, for that matter, their financing mechanisms. To the rating agencies normally rate companies and sovereigns because of their credit worthiness. And to the extent that they've been able to honor their obligation, it means that they are credit worthy. And so once they go back to the market, I don't foresee any challenge in terms of they raising fresh funds for their operation for the next cocoa season.
Thanks so much for being part of Business Life for today. I am Pius Kojo Baka. Do visit myjoyonline.com/business for more business stories. Great for serving you. I leave you with commodities updates.